Welcome to my YouTube channel, and today we want to dive into the start of the week that was on a Monday, how the market went, and try to understand what were we supposed to look at, and try to prove that actually ICT works. And I believe within some few minutes, that is less than 10 or 15, we are going to have a good narrative of what's happening. By now, I think you're now getting used to these lines. I say that every day you ought to have the midnight line that is delineating the start of the new day. That is something like this. Let me just show you. This red one shows a new start of the new week. And now, since our focus is always between 7 and anything to do with 7, that is before market open, that is between 7 and 9:30, and then 10 to 12. That's always our focus. Now let us try and get the narrative of what was happening on a Monday, that is 12th, or it's actually this week on a Monday. In my last two videos, I think this setup is now being shown almost every day now. This being our, actually, I think, our backtest and forward testing NASDAQ continuous contract. We are now seeing that it's actually becoming something, or a repetitive feature to see that every day at 7 there's always a sweep of liquidity, that is the previous high. It is taken out, then we create our current high between 7 and 8. After that, the market dipped all the way and gave us this low. And of course, the market cannot dip without a reason. Once it took out this liquidity, definitely the next liquidity to be taken would have been, if these were the buy stops, then we must have some sell stop orders right here and right here. And as you can see, once the buy stops were taken out, the market dipped quickly and took out the previous sell stop orders that were lying right below these previous lows. And since it only took this low, the farthest one was this one, then creating equal lows with the current one right here, which now I've delineated as sell side liquidity. After that, after taking this low, the market retraced, and it gave us actually a very deep retracement, meaning since we were selling and the retracement is kind of buying, it means we are looking now at our premium levels. And at our premium levels, we are trying to see between 50% and 78.6%, what will the market do? And as you can see, when the market retraced between 61.8 and 78.6, which is actually a very deep premium. And within it, we had a SIBI and SIBI, or a fair value. The reason why we are saying it's a fair value is because if you check keenly, before the drop happened, we had this, this low. As you can see, on its left and right, we have candlesticks that are actually above it, and now we have a swing low right there. And once the market went below it using this candle, now that one became our SIBI. And since it is actually occurring at our deep premium level, it was a place that we were looking at to see how will the market respond at that place. And as you can see, the bodies respected the SIBI, and as much as it closed above, above the middle line, this closement encroachment line, it gave us an entry when it tested the low of that SIBI. And if I was to zoom in, I think you can see clearly that the bodies respected it, and it gave us a hint of where it wanted to go. Since it is respecting the SIBI, the liquidity that was supposed to be taken was this one, the sell side liquidity, because our aim is always to check between 7 and 8, where are the equal highs and lows. And as you can see, sell side liquidity was the one that was actually having more, we had more confirmation of it being taken fast. And as you can see, this would have been a very good entry. And let me just check. Suppose you were to enter right above this up close candle right here. I think you would have caught a good move if you are targeting this low that was right here. And apart from that, if you had many contracts or many lots, you would have actually stayed with some on to capture this move to take out this sell side liquidity. And as you can see, those actually, it's a big move. 74 points is not a joke. It's not a joke. Now let us see what's happening at this place again. Once it respected the SIBI, it went all the way down, created equal lows. This is like engineered liquidity. Then retraced back to this order block, the down close candle, before the rally happened to this SIBI above here. It retraced right there. Then it took out these equal lows. Let me just delineate it so that the ones that cannot see, they can see it clearly. Right there. I'm going to change the color to a green color, something like that. This engineered liquidity, this was now the sell side liquidity that was taken immediately the market touched this order block. And as you can see, the bodies respected it very well and took out this liquidity. Immediately after that, the market retraced further, coming closer to actually touching the order block, and it sold off. It sold off to this area right below our sell side liquidity and went further. Let me just try and zoom in so that you can all see where the market was heading. Immediately the sell side liquidity was taken, the market went further to an area where it created equal highs before this deep retracement. It wasn't that deep because the retracement came up to around 50%. If you take your fib and you measure from this order block to these equal lows that were created, you will see that this is a 50% retracement. This high that was here was taken by this wick right there, and the market sold off again. But if you are to check keenly, as much as the market went all the way down, it would have been hard to know how deep the retracement was going to be. But since the liquidity was taken right here, the only confirmation we were waiting for is whether we are going to take the liquidity right below these equal lows. And the only confirmation I got was this. After this liquidity was taken right there, there was this inverse fair value. It took out this high right there, went up, took out this liquidity, closed below the inverse fair value, retested the inverse fair value, and as you can see, the wicks did the damage, but the bodies actually respected it. And the market went all the way and took out this equal lows. So without being greedy, you would have taken this sell right from here and you target these equal lows. So your actually your stop loss should have been around right here, and this would have given you a risk to reward of 1 to 2. I think so. If you are to take, let us see, if we were to take a short right there and we target this area and our stop loss right above that previous high. But if you want to be actually, the reason I'm putting it right here is because, as you can see, most of the time the market, when it's actually, this is after the market open, meaning there's actually high volume coming in, so you'll have to actually give some room for the market to play. Since we can't put our stop loss right above the fair value or the inverse fair value, you can see clearly that we would have been stopped out. But if you had placed right above here, this would have been a good ratio, because if you can see, you're actually risking around 1 to get a return of around 3. So this would have been a great trade for the ones who saw it. Other than that, I would want to just measure to see, is what we are trying to learn actually occurring every day. Let us see. If we were to measure the high that was created after 7 and the low before 8, I want to see whether this thing is reoccurring every time, because once we measure, anytime we take a shot like at these areas, premium areas, where are you expected to get out? So you can actually get out immediately when the sell side liquidity has been taken. But as you can see, the market actually gave you areas where you can get out. Number one, apart from this sell side liquidity, you would have taken your profit at negative 0.5 standard deviation. The market came close to give us our, the lowest, the easiest fruit to pick at negative 2 standard deviation. This is where I always target. But if you see that the market actually doesn't want to give you this, you would see clear signals that the market doesn't want to do that. Because once these equal lows were taken, the market started creating, check, the market retraced back inside, right above, went higher, was affected by this 2 up close candle, and respected, retraced lower, and the market went higher. So the only reason why it is advisable to take your profits immediately the liquidity has been swept is to close in as much profit as possible. That is the only reason. And we're in this business not to do any other thing but to make money. So I believe that if you are targeting negative 2 standard deviation with a trailing stop, right, let's say if you entered right here and you are targeting right here, once this high was created and was taken out by this one, then let's say you scaled in more, it means 80% of your profits would have been closed at this area, and you left like 20% with a trailing stop. Once it created this low and you saw that this high that was created right here has already been taken out, then your profits would have already been closed right there. Now let us remove this measuring tool. Apart from where I've used, the first high that was created after 7 and the low created before 8, you can also check at the recent dip that was given after the before the market opened at 9:30. As you can see, once the market opened, it sold off, retraced, gave us a 50% retracement. And if I was to measure with a Fibonacci expansion tool, I can measure from right here to this equal lows created and right where the liquidity was swept. And you can see that the market actually gave us not something big as expected, but at 0.7786, the weak slide right there. Most times I try to capture at least a move of one, and that's where the two coincide. That is the -2 standard deviation and Fibonacci expansion tool of 1. So these would have been actually a tricky trade to hold on to as you target the -2 standard deviation. But always try to trail your stop loss the right way, and you lock in some profit so that in case the market retraces, you have closed most of your trades. So this was just the video of today. I hope that you'll find it insightful and you'll find value in it. And I hope that you're actually seeing what is happening and what is reoccurring every day. And with that, I'll just want to urge you, for those that have not subscribed, kindly subscribe so that you can motivate me actually to make more of such videos and to show that actually we are in this together. And with that, I'll see you tomorrow, almost same time, for another brief overview and narrative. Bless.